Welcome to the PAI Morning Briefing. I'm your host from PantheonAI, and today is February 21, 2025. Good morning, everyone. Let's dive right in with a quick look at the markets before we peel back the layers on today's big stories.
This morning, the S&P 500 is sitting at about 6,103 and a few points, down by roughly 0.17%, a modest dip that suggests investors might be treading carefully. Over in the world of blue chips, the Dow Jones is showing some strength with a price near 43,874, up by approximately 0.12%. Meanwhile, the Nasdaq is not having the best day, trading around 19,949 and down by about 0.28%. Shifting our focus to smaller caps, the Russell 2000 is down nearly 0.81% at around 2,261.
In the crypto space, always a wild frontier, Bitcoin is trading close to 98,569, up by roughly 0.23%, while Ethereum is performing even better, now valued at nearly 2,785, up by about 1.64%.
These figures set the stage for our discussion today as we navigate through a series of compelling market trends and important news stories shaping the financial landscape.
Now let's take a deeper look into some of the major trends that have investors and traders talking this morning. Markets have been displaying mixed signals recently. On one hand, you see the classic tug-of-war between cautious sentiment and pockets of optimism that reflect in our headline indices. The decline in the S&P 500 and Nasdaq suggests a risk-averse mood among institutional investors, while the uptick in the Dow tells us that many are still finding refuge in traditional blue chips. Meanwhile, in the cryptocurrency markets, modest gains in Bitcoin paired with a more robust rally in Ethereum might hint at growing optimism around decentralized finance innovations, even as regulatory energies intensify.
Speaking of regulation, our top stories for today largely orbit around two giants, UnitedHealth and Coinbase. Let me walk you through these issues with some detailed insights and analysis.
One of the most talked about pieces today is the situation with UnitedHealth. Repeated reports indicate that the nation's largest health insurer is facing a severe political and regulatory headwind. According to several accounts, including multiple stories from the Wall Street Journal, UnitedHealth has seen its stock tumble by roughly 12% as the Department of Justice launches an investigation into its Medicare billing practices. It appears that the investigation is focusing on alleged discrepancies in billing processes, a move that has raised eyebrows among healthcare professionals and market analysts alike.
What's interesting here is not just the immediate impact on UnitedHealth's stock, but what this implies about regulatory oversight in the healthcare sector as a whole. The investigation comes at a time when drug pricing, cost control, and transparency have been front and center in policy discussions. For investors, the key takeaway is the heightened regulatory risk that can suddenly shake even the most established companies. Is this a sign that further regulatory oversight might be coming for other players in the market, or is UnitedHealth the early warning bell? It's a thought-provoking question and one that demands close attention in the coming months.
But wait, the plot thickens even further with additional reports indicating that UnitedHealth now has to fight the government on another front. These additional investigations, which also focus on billing practices and drug pricing controversies, have compounded the negative sentiment. It's akin to being hit from both sides. For those holding UnitedHealth shares, this raises an important risk factor. Moreover, this dual assault from regulatory authorities underscores how the convergence of political and legal pressures can accelerate a company's market volatility. As we consider the broader implications, investors might want to ask themselves, when diligence meets regulation, how far can even the largest health insurer go?
Now let's shift gears to the world of cryptocurrency and tech regulation, where another fascinating narrative is unfolding. Coinbase, one of the leading exchanges in the crypto space, has reportedly scored a major victory. In a decision that has political undertones, former President Trump apparently lent his influence to help Coinbase win a regulatory fight against what many are calling a rogue Securities and Exchange Commission. This decision not only boosted Coinbase's stock, but also sent a ripple of hope throughout the crypto community, highlighting the remarkable resilience of innovation in the face of regulatory skepticism.
This story is rich with broader implications. For one, it suggests that there might be an emerging balance between fostering innovation and enforcing strict regulatory measures. Coinbase's win could pave the way for clearer guidelines for the entire crypto sector, offering investors more certainty in an otherwise tumultuous space. It also raises an intriguing question. Could this be the beginning of a regulatory evolution where political figures help bridge the gap between the government and the burgeoning field of digital assets? Whatever the answer may be, it's certainly a development worth watching closely.
In the energy drinks and consumer discretionary sector, another exciting story is brewing. Celsius, a prominent energy drink stock, has experienced a dramatic uptick of more than 30% following the release of its big quarterly results and the announcement of its acquisition of a rival brand, Alani Nu. This acquisition is being perceived as a power move by market participants who see long-term growth potential, reinforced by record full-year revenue figures displayed in the company's books.
This remarkable jump in stock price is not just a story about one successful quarter. It is a testament to the robust dynamics at play in sectors that combine consumer health, beverage innovation, and aggressive market consolidation strategies. Investors should note that while energy drinks are often viewed as a niche, they can offer explosive growth opportunities when companies make bold strategic moves like Celsius has done today. It also begs the question for those following the competitive landscape. Can aggressive acquisitions and robust quarterly performances change the entire narrative of market sectors that were once considered saturated or stagnant?
Now that we've touched on these headline stories, let's delve into some detailed sector analysis. The tech sector, for instance, continues to resonate with the story of Coinbase. With regulatory landscape becoming increasingly complex, tech companies are often caught between the promise of innovation and the looming possibility of strict governmental oversight. It's a balancing act, much like trying to solve a Rubik's Cube while riding a unicycle. The recent regulatory win for Coinbase might indicate that, with the right legal counsel and strategic influence, tech companies can navigate these choppy waters. However, minor regulatory missteps or adverse rulings could also send shockwaves through the entire sector. As investors, keeping an eye on tech regulations, government signals, and the evolving role of political influence might be more important than ever.
In the energy sector and consumer discretionary parts of the market, Celsius's performance is a prime example. Traditional energy companies have long been on the radar of institutional investors, but today's market is showing that companies with a strong brand identity in niche areas can command significant investor interest. Celsius, with its impressive quarterly figures and a strategic acquisition, is capitalizing on consumer trends that favor healthier, more innovative beverage options. This move forces us to consider whether traditional energy drink giants might feel pressured to innovate or consolidate to maintain market share. It's a classic case of modern business dynamics reshaping consumer expectations.
Turning our attention to the financial sector, the developments around UnitedHealth serve as a stark reminder that even well-established institutions are not immune to regulatory and political pressures. The ongoing investigation signaled that healthcare companies might soon need to be more vigilant about compliance and transparency, which could lead to significant shifts in stock performance. The financial sector, traditionally seen as a bastion of stability, might need to rethink risk models as regulatory reforms take center stage. Investors who once considered healthcare a safe haven might now have to juggle regulatory risk with growth potential. A question to ponder here is, how many more of these institutional stones will be turned before we see a broader regulatory overhaul in the financial and healthcare sectors?
Let's now cast our net out to the global market implications of these developments. In Europe and Asia, regulators are also studying how best to manage the tension between fostering innovation and upholding market integrity. The regulatory spirit behind the Coinbase decision is not isolated. Many international bodies are reassessing frameworks for emerging technologies and digital currencies. This global trend provides a dual-edged opportunity. On one hand, it means that there is a concerted effort to create a more balanced regulatory ecosystem, but on the other, it raises the specter of a fragmented regulatory environment where each region operates under its own rules.
Such a dichotomy could have far-reaching effects on multinational companies and investors alike. If regional regulators adopt differing approaches, companies like Coinbase and even large healthcare incumbents like UnitedHealth might have to tailor their strategies to navigate a labyrinth of rules and standards. For instance, if Europe enforces stricter guidelines on digital assets and the United States relaxes its stance further, investors could face an arbitrage situation that would necessitate a rethinking of portfolio strategies. It's the kind of global chess game that makes you wonder, are we witnessing the evolution of international regulation that might either spur global cooperation or drive competitive divergence?
As we approach the conclusion of today's briefing, let's share some expert insights and predictions. My own take on the matter is that we are entering an era of increasing convergence between political influence and market regulation. The healthcare sector, as epitomized by UnitedHealth's plate, is signaling that no company is too big to fail when regulatory bodies decide to step in. Likewise, the tech and crypto spaces, underscored by Coinbase's recent win, are demonstrating that innovation, when backed by strategic legal and political maneuvering, can triumph even in a seemingly hostile regulatory environment.
Looking forward, investors should maintain a balanced view. For those in healthcare and finance, the emerging regulatory risks mean that caution and diligent research are more important than ever. Meanwhile, in the tech and energy sectors, opportunities exist for those who can identify companies with strong fundamentals and the ability to leverage regulatory developments to their advantage. Will regulatory interventions lead to more transparent, more investor-friendly markets in the long run? Or could they usher in a prolonged period of volatility as companies adjust their strategies? These are the kinds of questions that will likely dominate boardroom discussions and trading floors alike in the near future.
Let's not forget to inject a little humor into our financial musings. It's almost as if the market itself has developed a personality, sometimes moody and temperamental like a cat, that only comes when it feels like it, and other times more reliable than your favorite pair of slippers on a cold winter morning. When the market dips, you might feel like you're watching your stocks do the cha-cha, one step forward and two steps back. But at the end of the day, if you ever feel like the financial world is one big cosmic joke, just remember, even the best investors have days when their portfolios look like they're trying to perform interpretive dance.
Before we wrap today's episode, let's revisit our key takeaways. We saw mixed market signals this morning, with major indexes painting a picture of cautious optimism coupled with the potential for volatility, especially as regulatory themes come into sharper focus. On the story front, UnitedHealth is under significant regulatory pressure with twin investigations that could alter how we view compliance in the healthcare sector. Coinbase's regulatory victory, aided by political influence, may signal a turning point for the crypto market, offering a glimpse of a future where innovation and regulation may find a better balance. And in consumer and energy sectors, Celsius has shown that bold moves, such as strategic acquisitions and strong quarterly performances, can drive stock performance in a very competitive landscape.
In terms of sectors, the tech world remains at the mercy of regulatory innovations. The energy and consumer discretionary sectors are poised for growth, with companies that are agile and innovative, and the financial and healthcare sectors remind us that no matter how established a company is, external regulatory forces can dramatically shift the narrative. Globally, we are likely to see a patchwork of regulatory regimes that will challenge multinational companies to adapt quickly.
As always, I encourage you, our listeners, to reflect on these trends. How do you see the role of government regulation evolving in sectors that were once considered reflective of pure market dynamics? Could the intervention in crypto by political figures be the catalyst for broader reforms, or is it an isolated case? And will healthcare giants, once thought untouchable by regulatory agencies, find themselves needing to reinvent compliance for the 21st century? I invite you to mull over these questions as you plan your next moves in this dynamic market environment.
Our discussion today highlights the need for agility, thoughtful analysis, and above all, curiosity. Remember that investing isn't just about following trends, it's about understanding the forces that shape them. And here at PantheonAI, we take pride in being your information co-pilot, guiding you through the vast oceans of market data and news with insights and a touch of humor.
Thank you for joining me this morning on the PAI Morning Briefing. I hope you found our discussion as engaging and informative as I did. Don't forget to tune in tomorrow for another deep dive into the markets. As always, if you ever have questions or need further insights, you can always ask questions to our AI co-pilot. And remember, learning shouldn't feel like a full-time job.
Until next time, keep questioning, keep analyzing, and most importantly, keep smiling as you navigate the thrilling world of finance.